come out and have some fun with us and learn about some of the lending practices, share best practices, and find out about some of the things that the lenders are doing now to make it a little bit easier. It's a little bit more palatable now to get a loan than it was, I don't know, a year ago, right? When the shock of COVID started, and we were just getting started, and this was all new to us, right? So I want to make Ebony a co-host, and Arlecta, I want to make Arlecta a co-host. These are our board members. I'd like to introduce Ebony Lucas, our current secretary and real estate attorney.
Hello, good evening. Thank you all for joining us this evening. I'm Ebony Lucas, and as Tony mentioned, I'm an attorney, real estate attorney. I'm also an investor on the South Side, like many of you. So welcome to our call tonight, and we look forward to hearing from our panelists about financing in 2021 and what lenders are doing, what the guidelines are. So, thank you.
And Arlecta, are you still on the road?
I just pulled in, but I can say welcome to our meeting. I'm glad everybody took some time out to attend. Be prepared to get some very useful information to help you move forward in your business. Or if you're trying to get out of the business, you'll probably find people who would like to get your property for you. So this is going to be fun. It's a little bit different, but we're getting used to being on Zoom. So let's get ready, get our notepads so that we can enjoy the evening. And again, thank you all for attending. And if you have not yet joined us, there is a link so that you can be a part of our group officially by joining us. So thank you.
Yeah, I just shared a link in the chat for those of you who want to renew your membership with SFCIA. You can click that, very easy. To update your membership, or for new people that want to join the SSCIA, we encourage you to do so that we can continue to fight the good fight on behalf of property owners and advocate on your behalf. As you know, here in Chicago, here in Cook County, here in Illinois, there's been rapid pace legislation that's coming out that feels like it's unbalanced as far as property owners, the rights of property owners, the rights of investors are concerned. And we want to make sure that you guys, that you know that we're there. We're in City Hall, we're in Springfield, we're meeting with aldermen, commissioners regularly to at least allow them to hear our side as property owners and investors. If you aren't part of the presentation, we would ask that you keep your cameras off, because what it does is sometimes that slows down the feed a bit for other people when it's too many cameras going and it's too many microphones on. But there will be times when you will be part of the conversation. You will be part of the conversation, and we would ask that you kind of try to help us out with that.
I do want to chime in on one thing that Tony just said. So throughout the pandemic, Southside Community Investors Association has worked with the Neighborhood Building Owners Association, which is the larger organization that sort of brings together all of the neighborhood organizations throughout Chicago. And we have been really trying to advocate for and push for property owners to get assistance during this very difficult time, and also push just to stop some of the legislation that can be negative and punitive almost towards housing providers. And we know that this has been a very frustrating time. The Neighborhood Building Owners Association, they hired some a PR company, and they've been working with the PR company to really get the stories out that, you know, the property owners are not necessarily the monopoly mean old white guy. You know, it's a diverse group of people throughout the city that are providing housing and improving neighborhoods. So we've really been trying to get that message out. To do that, it costs money. And so we really do encourage you to join the Southside Community Investors Association. And I will post the link for membership. Oh, looks like Tony already did it. So the link for membership is in there. And so we ask you to please join. And we will continue to keep you abreast of what's going on. Most recently in Cook County, they passed an RLTO for the county, which now impacts outside of Chicago but every property in Cook County as a whole. And is very similar to the Chicago RLTO. So we'll have another meeting where we'll talk about that. But just wanted to chime in and say, join us, please. Thank you.
Hey, Ebony, is there a website we can visit just to understand, like, what are some of the membership benefits joining in?
That's a Tony
There's,
question.
yeah, sure. So no, we are pretty active. We have a SSCIA Facebook page, which is pretty active, and we kind of keep current events over there. There is the Neighborhood Building Owners Alliance, which is our larger neighbor NBOAchicago.com, which is our larger umbrella organization. We are the Southside Community Investors Association, one of 8 neighborhood groups of property owners that get together to voice our opinions, voice our concerns to the powers that be, and sometimes even just to get in together to kind of huddle up and get our bearings on some of the things that have happened, or some of the things that's going on, even just crying on each other's shoulders as it gets really tough sometimes with collections, and it gets tough with unemployment really hits, and it's hard to find good quality, to have a good quality tenant pool to pull from. So we're one of 8 organizations or 8 neighborhoods that get together regularly to do that, and we also are part of the NBOA PAC, where we try to kind of pick and make decisions and make donations to the legislation.
Yeah, I would say one of the biggest benefits of membership is really that opportunity to get in front of a lot of this legislation that's coming down. One of the most significant calls that I've had most recently was with the state of Illinois and the city of Chicago, because they're about to roll out additional assistance for property owners. And one of the things that we really push for is that it shouldn't just be the tenants who can apply. The property owners should be able to apply, because some of the tenants just don't have the wherewithal to apply. So they actually changed the guidelines based on our recommendations. The residential landlord and tenant ordinance for the county is much better. It's nowhere near as harsh as the residential landlord and tenant ordinance for the city, because we were able to talk to them before they passed that legislation. And that's the type of advocacy that we're doing for property owners. And that's the biggest benefit of membership, is being a part of an organization that is really advocating for you as property owners, and especially in this pandemic.
And if I may add, some of the other benefits are being able to network with people who have been in this business for long periods of time. So you may be new and you're not quite sure of maybe who to call because you need an electrician, or maybe you're trying to figure out what the regulations are for the new leases and what you have to say to tenants, what you can and can't do. Those are things that you are able to find out in a smaller group with people who have been involved in this business over the period of time. You're also able to network. There may be someone who can tell you this is a good insurance, or you're looking for insurance, this person may be able to help you. Are you looking, like tonight, you're going to find out about lenders or things. So the advantages is, it is like being able to go to Property Management 101 on a monthly basis and get information to help you move further along in this business. And you're getting the information from people who have been successful doing it already.
Yeah.
Thank you, ladies and gents. I appreciate that. One, just for like making sure we're clear about what the membership benefits are. And Ebony, just thanks for your advocacy. I've seen you all over the news and Facebook with that advocacy, so appreciate it. So that's helpful. Thank you.
We appreciate that, Kelly. That's an excellent question. We are a 10-year-old nonprofit organization that came together, just a group of half a dozen initially property owners getting together to get our bearings and figure this out. And we've grown to do a lot of advocacy in the community. And over time, joined the Neighborhood Building Owners Alliance, and that organization has grown as well. And it's really, we find out that it's a lot more tenants than there are property owners or landlords, and we're stronger together. And we are small business owners. We are investors in these communities and stakeholders, and our voice should be heard. And sometimes also, as these government programs roll out, the PPE and some of these the tenants, the programs to help, but with the stimulus and the just rapid fire legislation that affects property owners, the small guys, we don't have a lawyer on payroll to figure this stuff out, even how to process the applications or keep up with the new disclosures. So this is a way for us to come in and share best practices. And I think the number one benefit is just a knowledge bank. We got guys that have been in this business for 40 and 50 years. And then we got other people that are just coming in.
What's that?
And
Yeah, I'm on the call.
See it all the time where they're picking up as far as mentors, and helping to really reach out to those in the community, lift each other up, and give them a hand in this time of need, but also share best practices. But without further ado, I want to introduce our lender panel. We have an outstanding group of lenders here today that is gonna talk to you a little bit about their best practices, about how they're impacting the community, and some of the lending programs, and those have changed a little bit since the pandemic has happened. Not as rigid as they were, but definitely, I know CIC, we're gonna start with Tony Hawthorne with CIC, really an advocate. He's been in the business since I've been doing commercial real estate, and really just a wealth of information, a wealth of knowledge, and really quick turnaround. He lets me know, hey, I can do this, here's how it's gonna look, or I can't do that, that's not gonna work. Tony, why don't you tell us about who you are, a little bit about your company, and just a brief introduction, and then we'll go to the next one and keep going.
Sure, no problem, Tony. Thank you for having me and inviting me to speak with the Southside Community Investors Association. As I stated in my breakout session, I've been with the Southside Community Investors Association since its inception. So a little bit of history there. I've been with CIC for more than 22 years at this point. I think in April it'll be 23 years with CIC. I've been lending for in excess of 40 years at this point. 40 years. I started with Continental Bank back in 1979. A lot of folks don't even know what Continental Bank was. So I'm effectively known as an ex-con because I'm an ex-Continental banker.
How was y'all getting credit reports back then? What's your
AOL? CIC is a major force in the multifamily arena. We're pretty much exclusively a multifamily lender. We do have a single 1 through 4 unit program, which we'll talk about a little bit, as well. But pretty much we're our bread and butter product is our multifamily product. We're anticipating bringing on a single family building program where people would be able to actually acquire properties and build 1 through 4 unit properties, where we're working with the city of Chicago to get that program up and running, and that will happen probably within the third quarter of this year. But we're a hand-holding organization. Been in business for about over 50 years at this point, and we're somewhat of a no-nonsense organization. We're not a bank, so we're not constrained by some of the limitations that banks have to deal with. We look at the actual individuals, their assets, their experience, with the potential cash flow of the asset that they're trying to buy. If there is a rehabilitation component associated with the transaction, we look at that as well, and we walk the individuals through the whole process.
So you guys will do like the value add. I mean, it don't have to
Absolutely.
be all the way
Absolutely.
stable. It could have some repairs and
Absolutely. Yeah. Yeah, absolutely. Yeah, we do those value add situations where individuals are really getting a good buy, and they're able to add value to the product to the product and optimize the income on it. So yeah, we had slowed down on doing some of those, but we're back doing a lot of those. So that's pretty much who CIC is at this point. We lend in the entire 6-county metropolitan Chicagoland area. Most of our lending is done in Cook County, but we're far stretching, and we only lend it in the Chicagoland area, 6-county metropolitan Chicagoland area. So, okay.
Awesome. Next, I'm going to bring up Maureen Mckenna, another community-based lender, making an impact. I think I was at a Urban League event. Maureen was discussing some of the programs and success stories that they've done. And I think it was a young man who was looking to start a business, had been incarcerated, didn't have the best credit, but he had a really good idea. And Maureen said, hey, we were able to lend this guy, I believe, $500,000 to get his vision going and get his business going. And I looked more into it. I mean, just a great organization, a great person. That was years ago. Can you tell us a little bit about your background, your company, Maureen, and how you guys impact Chicago and neighborhoods really around the U.S.?
Sure, thank you. That was a great introduction, Tony. Thank you. Community Reinvestment Fund is our company. We are located out of Minneapolis, but we're national, and we are in several cities and states, Chicago being one, and I am here in this market. We are a non-bank lender as well. We support small businesses with loans. We're looking to support minority, women, and veteran-owned businesses and underserved communities. And in particular, at this time of COVID, trying to find a way to restore these businesses to the level of which they've been able to work in the past. And if not, restore it to help them figure out a way to pivot. And that story that Tony was speaking about, we sort of pride ourselves in the fact that we're looking for businesses. We want to help these businesses. We don't want to turn them around, turn them away. And there was a young man on the south side of Chicago who had a landscaping business. He had been incarcerated, I think, up to 10 times. And I was with him at the University of Chicago event where he told his story, and you could have heard a pin drop in the room. It was just so emotional. And we were able to give this guy a loan so that he could start out again. He ended up opening his own business because he was never able to get a job in this market because of his incarcerations. And he has now turned that around. And his vision really was to be able to help other people that had gone through incarceration to get a step up. And he's been doing that and hiring people in his business. And he has now expanded and taken on larger loans and is doing really well. So it's such a wonderful success story. And those are the kinds of stories that we want to impact in this market. So we have several different types of loans, particularly for small businesses. We have an SBA 7A that loans up to $5 million. And it has it can loan up from $150,000 up to $5 million. It has a 10 to 20 year term, and its interest rate is prime plus 2 3/4. So it's always our best opportunity for the small business because of that, because of the long term, and because of the interest rate. We have a patient capital loan that we have created ourselves. It's a loan that's not backed by any government. The reason the SBA is beneficial to both CRF and the community is that the SBA backs it, and so there's that guarantee for the lender. So it works very well. But the patient capital loan is our loan. And we did that because we saw that there was a need in market for a loan up to $250,000, not based on credit, based on character. And it's a much riskier loan, but it's a loan that we feel we need to make. And we're so compelled about it that we're now doing research to create the 2.0 version of that. So that's just a little bit about the types of things we do. We've been very active with the PPP loan, did over $524 million of the PPP loan. And also we had a resiliency fund program with the city of Chicago, where CRF partnered with the city to provide loans in market to, at the same time the PPP loan was going on. And we did about $24 million of loans in that with that loan. So we've been very active. We are partnering with many organizations in market to be able to provide the best services to small businesses. We realize that small businesses need a lot of TA and back office support, and we're working toward that end, toward partnering with those organizations in market that can make it work on both sides for the entrepreneur.
Awesome. Thanks for that. Maureen is actually, their group is helping us on a loan now where a seller is selling a mixed-use property, and the tenant, the retail tenant, has been in that space for over 10 years, paying like $3,800 a month. And we're working to help that tenant actually become a property owner, and really trying to make an impact in the community. And the story is actually that retail tenant's uncle occupied that space for 20 or 30 years with Coop's records prior to that. So we're really trying to work through that situation. Next, I want to bring up Wendell Harris with Chicago Community Loan Fund. I understand that you and CIC and CRF, you guys do a lot of work, together and share and exchange. Tell us a little bit about Chicago Community Loan Fund, how you guys impact the community, some of your successes, and also why you think SSCIA is a worthy or important organization.
Great. Again, thanks, Tony, for allowing us to participate. We all have roles, in really trying to solve problems, and it is very, very important that CCLF, works in conjunction with, a community investment corp, a reinvestment fund, right, as well as the Illinois Facilities Fund, because there's so much out here for all of us to do, right? So Tony talked about, how they focus on housing, right? He also mentioned the fact that they're working on a 1 to 4 unit initiative. As we all know, there's still so many vacant and abandoned 2-unit properties, right? So we all need to help in that fashion, right? Maureen talked about on the small business space, right? How they are trying to support folks that may not have like a lengthy track record, but they have some capacity and they come from historical perspective of family members owning and operating real estate, right? So we all have these various roles. CCLF, Chicago Community Loan Fund, is a bit more, I would say, as a gap filler, right? A lot of our partners kind of consider us that because of the spaces that we play in, right? So 30-year-old organization as of January 9th, 2020. We started out with very humble roots about 30 years ago, focusing primarily on cooperative housing structures. Fast forward to 2021, we are a $120 million fund with about $90+ million of that as our book of business. Anything from vacant land acquisition for future large-scale development. Mind you, we are primarily a real estate lender. We also focus on 1 to 4 unit projects where we provide access to capital, 90% of costs, up to 120% loan to value for suppressed affordable rentals. We support the buy-sell structure in the 1 to 4 unit space, mixed use, community facilities, as well as large and small scale real estate projects, for-profit and nonprofit. And then we also help nonprofits and social enterprises with equipment and working capital. And to support the people in the real estate in our communities, we provide technical assistance as well. So what does that look like? So that could come in the form of CCLF in conjunction with Chicago Trend, supporting the acquisition of a strip mall on 83rd and Holland over in Chatham, right? It could also come in the form of Chicago Trend, and I'm referencing Chicago Trend because we're the fiscal agent for that particular initiative. So we have their investments and we conduct the underwriting, and in partnership, we collectively make things happen in the commercial retail space. So it could come in the form of a build out for one of the tenants in that same strip mall at 83rd in Holland. It could also come in the form of a mixed use 21 unit building over in Roseland, right? Where we've helped a borrower obtain 1.1 million in capital to rehab and stabilize that building, right? It could come in the form of a senior living facility where we helped a larger developer acquire a 100 unit building over in Maywood and prepare that building for low income housing tax credits. And then on the bigger scale, we participate in larger 30, 40, $50 million new market tax credit deals where we may provide a piece of the capital. For example, the Friend Health deal over on 63rd Street. So in that vein, we are all needed, right, in order to really make things happen in this particular landscape that we're operating in. To also support Tony's point around SSCIA, I've been dealing with SSCIA in some shape or form. Tony, I feel like it might be over 10 years now, because I originally got engaged with you all over at Urban Partnership Bank, and I was trying to help get you all in the building I was trying to help you all get in the building, kind of long story short. And it's amazing that, we're 10 years down the line, you're a major part of the success of the organization, you and Ebony and some of the other great partners there. And I think the wealth of knowledge that this organization brings, not only to the Chatham area, but I would say even up north, right? A lot of developers that are coming.
in the kitchen with a wine cellar.
I think we got some feedback from somebody. We got a lot of developers that actually, drive all the way down, even though they got assets. Some of them, we know they won't really hang out, but they come down to these meetings because the SSCIA meetings are so important. So I'm just honored to still have a good relationship with you all. I owe you your fee too, and I'm gonna make sure I pay that fee before the month is over too. But again, I just think this is a great organization to participate in.
Well, thanks for that. We're going to open the mic up a little bit. I think I got one more lender here. I got Charles Jones with M&T Capital, Realty Capital. They're a subsidiary of a bank, one of the bank lenders. We got a bank subsidiary here. I know you guys are kind of intermediaries, and Charles, I'm going to ask you to unmute yourself and join the conversation. See if I can get that. There you go. Tell us a little bit about you and your background and some of the types of loans you do and how you affect change or how you impact our communities with your products.
Well, Tony, thank you for having me this evening. And as Tony mentioned, my name is Charles Jones, and I'm with M&T Realty Capital Corporation. So with M&T Capital Corporation, I provide permanent financing for primarily multifamily properties. I can offer agency financing, which is through Fannie and Freddie, but we also have some life insurance financing products that we offer that can be done on multifamily properties, as well as industrial, retail, and things of that nature. I also am a commercial mortgage broker where I work with individual investors, some of them seasoned investors, some of them are not so seasoned. But what I do is, you have, as you know, they have many lenders across the country, or let's say just across Chicago. And what I try to do is I try to look at your portfolio and what you've done and what you have, whether it's 1 to 4 units, 5 or plus units, and try to match you up with the best lender in town based upon the programs that they have. there's not one lender that provides everything that you need, but there are a number of different lenders out there that can provide you what you're looking for, whether you're looking for permanent financing, whether you're looking for a line of credit. And so those are some of the things that I do. And I also work with my clients as well in terms of making sure that they have their financials in place and make sure that they're presentable to the bank to so they can have get the financing that they need on with the best terms that they can have as well. So that's kind of me in a nutshell. I've been doing this for about 25 plus years. I've been coming to Chicago since 1974. My parents are from Chicago. My grandparents are from Chicago. I live in Southern California now, but I went to undergrad at Northwestern and went to business school in Kellogg. So I'm very familiar with Chicago, and it's a great city, and I love visiting.
Wendell gave, Charles gave us a quote recently on a multifamily deal, 10-year fixed at I want to say 3.5% interest rate on a just a small commercial property. So there are some things out there. I want to ask the lenders, Charles and Wendell and Maureen and Tony Hawthorne, and, open your microphones up, and if you want, turn your cameras on, and let's have a conversation about lending and the current state of affairs. I know initially a year ago when COVID kind of hit and the government was locking, the governor came on and said, hey, we got to go under a lockdown. And the unemployment rate fell at the fastest rate in history. It was all of a sudden 40 million jobs lost in, a matter of weeks. And we're like, nobody's going to pay rent and everything's going to implode. What initially happened to you guys as lenders? Because you guys, what did you think? And what was happening in those meetings that you could tell us about now? And how did the game change then? I want to take a snapshot 1 year ago. What happened?
Yeah, I'll jump in here real quick because it was quite traumatic for us. A year ago, about this time, we stopped lending. We just, we totally stopped lending. If it were not a situation where a transaction was 50-60% loan to value, no rehab involved, we were not even looking at those transactions. So they had to be super safe transactions. Our normal products are normally 80% LTV or higher, sometimes 90% LTV. We have since people have gotten used to what's going on, the new normal. So we've opened back up our lending practices. And what we've found out is that the folk who are well capitalized, the good owner operators, people who run good buildings, they've been able to weather things because people got to live someplace. And I do realize that with this less sophisticated tenants may have been losing their sources of income and things, but they've actually found a way to make things work for the more sophisticated owner operators and the building owner operators. It may not be the best time for people who are really trying to get into this for the first time because again, I'm a multifamily lender, so it really takes a great deal of capital to do those transactions. But for those individuals who are well capitalized, there are some deals out there, and we're back in the game again. We're back lending again. This is probably going to be one of our better years as far as what we budgeted. We only budgeted for maybe $33-35 million to do this year. Now, mind you, I'm working with a loan fund of about $400 million. Typically, we're lending about $70 million, a year. So we had only budgeted, about $35 million this year. We're just about moving up on the by the end of the second quarter, we will have made that budget by the end of the second quarter. So it's not a bad year for us.
It's gone, and we're dealing with the new normal. What happened to you, Wendell? Is it like an initial period. Charles keep pumping in and out here, letting in the Southern California sunlight. We're in Chicago, but that's all right. Come on, tell me a little bit, Wendell.
Sure. So what I'm about to say may not necessarily represent all of CCLF. I want to preface that. So I say all that to say, when the pandemic hit, one, we started to step into an alternate role, right? Because of the heavy need for some of the small business owners. And that came in the form of us stepping in with the Small Business Resiliency Fund with the city of Chicago. We also became a grant administrator for the state of Illinois via their BIG program, as well as the cities together now. I made the initial comment because when the pandemic hit, personally, I was not extremely scared that our company was going to lose our shirt. Again, this is my opinion. I want to preface that. What I was more nervous about is our communities being stolen, right? Because as we look at what has transpired, there was a lot of real estate activity going on last year still, right? And I can say that because when I look at my loss rate, my default rate, I'm still less than 2%. Actually, I'm closer to 1%. And we just came out of a pandemic, right? Now, some say the storm isn't over, right? You know, some are saying, hey, it's really just about to hit now, right? So I think you know, it's still, you know, that's still debatable, and we'll see it as things kind of come to light. But I say all that to say there are still a number of good, prudent folks in the market that are doing right with their capital, and I feel like we need to be like ready to assist, at attention for them, to be able to give them the capital in this particular time period to be able to aggregate as many assets as possible.
That's an interesting perspective. I just saw some numbers nationwide. The default rate or distressed properties is less than 2%. It's because lenders like you, they kind of got into mode of how can we help our clients, right? How can we help them to weather the storm? How can we help them to restructure and forbearance agreements or whatever it is to help them to get through this? And a lot of the landlords or property owners were doing the right things right from the initial. I was on calls with property owners all over the country, and they were saying, "Hey, communicate with your lender. Let them know." The guy that owned the Cheesecake Factory and 1,000 other retail establishments, he was saying, "Hey, look, I got a list from my 600, my 1,000 tenants. 600 of them are saying that they're going to pay. 400 of them, I'm 200 are saying they're not paying for 120 days, or they're trying to find out where the dust is going to settle. And I'm trying to contact these other 200. What I can tell my lender is that I can make a payment. I can make a principal payment, or I can make an interest payment, and communication. I think the communication was key. I think some of the other lenders were starting to, where they weren't loaning anymore, but the loan officers were very active in calling up clients and working with clients to assess their situation and help them through this crisis. So,
and if I can add real quick too, yeah, and to that point, I got to give a shout out to my portfolio management side of the house, because we actively did that, right? Those that made calls, we, you know, behind the scenes worked on trying to create options to where we don't have to go back to committee and get various approvals. We built the infrastructure internally just to say, hey, okay, we want to give you all some grace, right? And we did that, right? And a lot of them recovered, and some of them actually still tried to make payments during that time. Because the reality is a lot of us want to do the right thing. You know what I mean? I think sometimes we just believe that people ultimately are bad. And I just disagree with that, right? And going back to your point around Cheesecake Factory, right? People are still eating in the hood, right? I always tell my story about being at 5 Lowe's with probably 15 people standing outside, you know, DoorDash, Ubers. You know, I've been over to Mary's on the west side, right? And they busy as heck over there, right? You know, people are still eating. I mean, even out with Flavor over in the south suburbs, Flavor and Flavor Brunch, there's still activity going on in our neighborhoods.
Maureen, give us a little bit.
So I just appreciate hearing all of this because it sort of reverberates in my brain for what was going on with CRF. And I think in the CDFI world, in the small business world, everybody really came together to say, well, this is really a different thing. What do we have to do? We have to be different. And we started setting up recovery models. And those models would go into areas like they did with the city of Chicago with the Resiliency Fund. They did one in New York State. They're doing one in the South. They did one in California and Washington State. And the point of it is to create a fund that that the people that are doing the loans can sell their loans to the fund, and so that they have liquidity at the end, and it's not so much of a risk. The other thing was that fortunately, the SBA forgave a lot of loans for about 6 to 8 months last year. And so we were able to really keep those businesses that did have loans with us afloat because they had that time period where they could try to pivot their model and figure out what else they could do. And that has been a saving grace. I know that there's a restaurant on the south side of Chicago. It's a little Mexican restaurant and family owned. They've been very successful. And prior to opening the indoor restaurant, they just had a food truck. And in order to survive, they went back to the food truck and they'd sold the one item that was so popular. And that one item that they sold over and over again, they're still doing it on the food truck, is able to sustain the mortgage on the whole restaurant. And so they're able to stay afloat. And so it's those kind of stories that were coming up over and over again, that working with the entrepreneurs to find ways to be able to help them pivot. And if they couldn't pivot, find ways to help them see whether or not they needed to close and move on to something else. So it's been a difficult year, but I think inside the difficult year, there's been a lot of graces. And some of those graces are watching and seeing how people are finding ways to survive, and they're doing it. And so it's been, and in the spite of it, we're still making loans, and people are still opening businesses. They're still coming to get a loan. They're not stopping. And I think that should be great news for everybody inside of the pandemic and all of the concerns with everything moving forward, that there's activity and there's hope, and there are people that are finding ways to make it work.
Thanks for that. I remember the initial thing. I was getting calls I got a call from investors, like, I'm suing Fannie Mae. Like, like what happened? You know, like they didn't know, like everybody was shocked. I think some investors got left at the closing table. Their deals were funding, or they signed the paperwork, and everything stopped for a little while. But after a while, things got back on the rails, and we were able to figure it out, and we're working through it. It's different. We're doing business differently now, but we are getting business done.
Tony, Tony, I have customers who are on this line tonight, who, when we had deals that were in the pipeline, moving through the process, and, whereas normally we would take, anywhere from 45 to 60 days to get a deal done. It took me 4 months to get their deal done, but we finally did get them done and got them to the closing table. But that's, we had to regain our footing. And that's what we did. We regained our footing, and we were able to kind of, continue lending and really gin back up the process throughout this whole thing.
Yeah, it was, just to add, it was a tough time though, just from a credit standpoint, right? Because there was some tough discussions internally around, okay, now do we change our credit policy, right? Which I totally disagree with again, right? We need to remain open, but yeah, there were a lot of hard discussions. We did have a couple deals, one in particular that I know that kind of took longer, I think, because of COVID. But again, we got it done at the end of the day. But yeah, there was some effects, but suffice it to say, we kept trying to support the community.
Tony, Hawthorne, Wendell, Maureen, and Charles, add to the conversation. Charles, tell us what was happening in your world. I think at that point you might have been with Hunt Mortgage, and I know some things. Make sure you guys put your contact information in the chat so that our membership can know how to reach out to you to ask more questions about the conversation.
Well, for me, Tony, both on the agency side and on my mortgage brokerage company side, there were some trying times because I had about $50 million in deals in the pipeline. And what was occurring is that underwriting standards were changing on a daily basis. Pricing was changing on a daily basis. We were typically lending at a 120 debt service coverage, and we go up to a 135, 145 debt service coverage. So of course that reduced loan proceeds. And then Fannie and Freddie came out with the principal and interest reserve, wanting to have 12 months worth of principal and interest set aside in an escrow account until the pandemic was over, or for at least 12 months. And so you have a borrower thinking that they're going to be getting $2 million in cash out and only end up getting maybe $1.5 million. So proceeds or cash out is reduced by $500,000. So you could imagine I found myself not only being a lender, but also a therapist as well, kind of coaching my clients through all of the mess. And on the commercial mortgage banking side, dealing with credit unions and some of the other lenders that I dealt with, you literally were 2 and 3 weeks away from closing a deal, and lenders would say, "Hey, you know what? We can't do this deal." I was working on a deal recently that I closed with a credit union, and we closed about I think it was February 11th. We started working on that loan last August. So to Wendell's point, things just took longer. Things are taking longer. From the agency side with Fannie and Freddie, they did not stop lending. They just changed the terms of the lending. And those individuals who were really able to get money during those time periods were those, well, I shouldn't say lenders, those borrowers who had low debt service coverage, or high debt service coverage and low leverage deals. And it was kind of ironic to see them refinancing because rates were good, and they were taking their money and they were going and buying distressed assets from people who were a little over leveraged. You have a number of people who are from Southern California who like to buy in Chicago, and they have partners in Chicago that they would funnel money to or give money to. So while there was a segment of the market that was not necessarily losing their assets, but they were under stress, distress, there was also a significant portion of the market where there were clients that had capital or access to capital, and that were going in and buying deals or getting distressed assets and really making money during this pandemic. So one of my things is to try to have the people in the community be investors on the South Side, or whether it's on the West Side, and understand what's going on in their communities, because you can have a lot of investors from Southern California or other states come into Chicago to buy the assets. But in order for the community to really continue to grow, my thing is that we need people who live in those communities to own those assets, whether they're putting together syndications and deals and buying maybe a 5-unit or 12-unit, and maybe they're only putting in $50,000. But I think that pride of ownership and being able to see your property every day is what really will help these communities thrive long term. I mean, something that I wish I had done, wish my parents had done as well. But I think there's plenty of opportunity for others out there.
Awesome. Yeah, that's a good segue, right? That happened, right? We don't want to stay there, right? So yeah, lenders guidelines changes. They wanted more reserve requirements or lower LTV requirements or better debt coverage ratios and things like that to kind of make it work and kind of mitigate some of the risk and the uncertainty in the market. But for every lender that stopped altogether, there was another lender that said, hey, these guys been beating me up for the last, haven't been able to get a loan done. And they looked at, some lenders look at it as an opportunity for market share. Some of the larger institutional buyers and investors that we were working with said, hey, we're hitting the pause button. We're not buying anything for 120 days. They start exercising their force majeure in their agreements. They started pulling out of deals. Well, the smaller private investors or semi-institutional investors that have been getting crushed by these billionaire REITs and funds looked at it as an opportunity to get in, because a billionaire kind of calculates money a certain way. They're looking at more of a, legacy type play, and you're looking at it for capital. So it is a little bit of a musical chairs, if you will, as far as the investors and some of the lenders, right? And then we kind of got our sea legs, and we have some new best practices, right? I'm not doing the same business the same way. Fannie and Freddie started saying, hey, we don't need to get in to inspect every apartment anymore. Appraisers start calling and saying, hey, we can get into the vacant units and the other units. We don't need to go in, but if some of the tenants can open the door and we can take a picture just to prove that it's occupied, we'll be able to do that appraisal. And we figured out a way to work through it. What are some of the best practices that you did or implemented in your business that's really working for you now, right? And what I can tell you right now, SSCIA, right? Before the pandemic, we get together every last Thursday of the month, like we are now, and we have pizza and we talk shop just like we're talking now. But since the pandemic has started, we're forced to do this virtually. Well, virtually, there's some people here that wouldn't have drove to 79th and State Street, 79th and the Dan Ryan to come to our meeting, right? We got Charles in the meeting. He's in Southern California. So it's giving us a little bit more visibility, and it's opening some other doors. So can just feel free to jump in and tell us about some best practices that work for your business.
So I've I've reverted to the basement of my home. I went into the office for the first time in probably 4 months, Tuesday night. Notice I said night. I went into the office on Tuesday night. So I'm doing everything remotely now. And I find that I'm just as productive. I treat my day just like I normally would. I get up in the morning, come to my office here in the basement of my home. I'm talking to customers. My customers call in to my desk phone. It rings, as if, I answer that line, as if I'm at my desk. And I'm doing everything as if how I normally would. Now, as far as, because I've always been that guy who would love to go out and kick the tires. Every building that I finance, I go out and see it, walk it, touch it, have to really feel it and feel the, check the block out, all those things. So now I do drive-bys. It gets me out to see neighborhoods, and my inspectors, they will go out and they'll go through the buildings top to bottom to make sure everything is okay. But they'll make sure that obviously they want to see vacant units or units where tenants are may not be in there. We've implemented different safety precautions in going out to see the buildings. Everybody has to have proper PPE rather, and it's a different way of doing business, but it's actually, we're getting just as much done. We really are. Different, but not deficient.
Anybody else want to add to that before we get to our speed
I'll
round?
add, I'll say with CRF, I think that it has been, we are working remotely. We're going to be working remotely until at least July 1. And then we're going to reconsider whether or not we need to go longer. Hopefully by then everybody will have their vaccinations, but who knows? But it also caused us to look at the organization, I think, from a real point of view that, we're a not-for-profit that works with the underserved community, and we really wanted to make sure that what we were doing was we were doing what we're saying we were going to do. And we started an initiative called Forward Economic Justice, which puts a lens on economic justice and social justice across everything we do. And it really is the lens through which we have to do our work now. And it's been interesting because the conversations start at that point and move through that, and it's a different conversation because, and we thought we were doing that before, and we found that there was more we could do. And one of the things they just started to do was what they call a diversity and inclusion call once a week. And you got in a book club, everybody read books around certain topics around that. They did some historical education for the group, and or it was just a discussion. And the call is every week, and everybody joins it, and it's a very robust conversation. And it's really enabled us to get to know our peers in the work market on a much different level and a much more intimate level. And we're all working across the United States. We're not in the same office. And that's been a really good thing, I think, to bring everybody together under a focus of we can get this done. And it's new and it's different, but it's better. We're building
Awesome.
back
Looks
better.
like Wendell had something to add there, or did you?
Yeah, so I'm just kind of, my mind was kind of bouncing around when you reference kind of what changed, and I started to just revert back. I'm a big hip hop old school head, and I started thinking about Scarface. I got a head, but ain't no screws in it. I'm out a little bit. Today I was out over in the 2600 block of West Madison, looking at some mixed use projects over there. I was actually kind of all over the west side, actually, and south side today. But yeah, it's changed a lot. It's actually kind of sad not being able to have that interaction day to day. Our office closed, has been closed as well since March, but I've still been going back and forth to the office at least, maybe 2 times a week. And when I'm in the office, I'm also planning on getting out in the field and still kind of kicking tires on these properties and meeting with these people, because it helps us tee up these deals. And I know Tony definitely could speak to this. It allows us to get a real feel of who these borrowers are. And we still need to do that now. And I still found a lot of joy in it. I'm still trying to make sure I'm safe and, at a distance, and wearing my mask and things of that nature, but I still think it is imperative to what we do now to get out and be out in the field.
This last one, I'm going to start with Charles, and we kind of snake our way back with Charles, then Wendell, then Maureen, then Tony. It's going to be a lightning round. We're going to do this real fast, and we're going to go to a brief commercial break. I'm going to get you guys in some breakout rooms so you can continue the conversation. We'll open it up if there's questions afterwards. But what I want from you guys really quickly is a success story from 2020. And also, I want to know what your sweet spot is. I know you can do all kind of loans, but where is the client or the investor that's in this room, if he's thinking about going to a lender today, which deal really fits right on your machine and you could press it out, and why? Charles?
First of all, the success story, I would have to say it would be the deal that I started last August that finally closed in February. The borrower was very diligent and got all the information that they needed to the lender. We worked with the lender throughout the pandemic to make sure that they understood that the rents were still being collected and the properties were well occupied. And because of when we started the application, the rate was very low, and we were able to even increase the loan amount by a couple of $100,000 from the initial application. So I think that would have to be a success story, because there were many emails and many phone calls with my borrower who said, Charles, I don't want to do this anymore, but we were able to finally get him to the finish line, and he was very grateful. In terms of deals for me, 1 to 1 million to 10 million, 5-unit or more permanent financing. It's what's easier to get done today than anything else. Anything that has a value add component is a little harder. Anything with a significant vacancy is a little harder as well. But anything 5 units or more, $1 to $10 billion in loan amount is right down my alleyway.
Hey,
Okay, I would say for,
Thanks, Charles, for that. And keep it going, Maureen. Tell us a success story.
Yeah.
And
I would just say success story for CRF is the amount of money we were able to get to borrowers who needed it through PPP and in particular through the Chicago Resiliency Fund. And I would say the highlight of all that was the fact that we were able to work with partners, and the partners really were able to help make the referrals, and not only make the referrals, but do the technical assistance that was necessary in order for these businesses to be able to get the loans. And so those partnerships now have stayed very alive and are working directly with CRF right now. And it has caused us to look at doing the work differently. And part of the PPP process was knowing that a lot of people weren't able to access it because they didn't have the right documents. They weren't set up as a business correctly. And that has caused the whole world to shift in terms of how lending is done. And it's done through the lens of technical assistance. I'm sure Tony and Wendell can attest to the fact themselves. And it really has changed the landscape. And I think it's been a great thing for CRF to be able to have partners. All of our CDFI partners, CCLF and CNI and Axion, which is Allies for a Better Business Community now, and even NAMAC and United States Minority Contractors Association, all of these organizations that are in the communities that really are working for those individuals or those industries in the communities, and has made those people that are connected to them have much more success.
awesome. Wendell, real quick.
Yeah, so I would say a couple things real quick. So the senior living deal in Maywood came to us at the last minute, like the week before our loan committee in November, $5 million deal. We were ready to close before the end of the year last year. That was great. I got to go back to Resiliency Fund and connect with Maureen on that one. This was more of just a soft spot. This one lady's husband committed suicide, and we was able to give her money there. And then we gave money to a local developer to help. We closed on the funding to help bring a Batters and Berries to the west side over on Chicago Avenue. And then as far as deals, Tony, as you know, we're kind of all over the place, looking at all types of asset classes. So it's no specific deal or asset class. It's just that globally the deal has to make sense for us and make sense from an impact standpoint and cash flow.
Well, you guys got a retail fund a little while ago. I believe Chase and some other people were involved in that. And everybody doesn't do retail lending. And you guys do some portfolio lending. And if it doesn't fit, I know you won't mind reaching out to CIC and say, hey, can you take a look at this? Or reaching out to Maureen and say, hey, this may fit more in their program and project stack. So you've been a wealth of information to me as well. Tony Hawthorne, give us
Yeah. So yeah, I mean, a huge home run, for us. I mean, even after the pandemic started, was we did a 77 unit SRO over in Hyde Park, which I mean everybody knows it's hard to get things done over in Hyde Park, and to preserve an SRO, we had a developer, existing developer over there who was ready to get out of the business, and we were able to structure a 75% first loan and a 15% mezz loan on back of that for 90% financing for 77 units in Hyde Park, for a minority family, to get them into the SRO building, the SRO business, and that really, was we got it done in less than 60 days. And again, this is even after the pandemic. And then, one other, home run, transaction is, had a partner to come to us, and his partner, they owned a building on the south side of Chicago, and his partner was ready to get out of the business. And I was able to structure a transaction to loan him more money, to buy the partner out, and position him so that he's able to, continue to grow his portfolio as now that he's has full control of the building. He had a smaller portion of the transaction, but once we were able to, take his older partner out, who he had, gotten into business with, maybe a few years earlier, now he's able to move more heavily into the real estate game because he has equity in this transaction. So I'll be looking at doing more and more transactions with him in the next year or so. So yeah, that's another really good and building upon my book of business, in the years to come types of transaction.
Awesome. Thanks for that. We're gonna just plow through. We have a short presentation from the guys from Zoom Energy, Lisa and Alyssa. You guys can turn your cameras on, and you should be able to share your screen. And you guys gave me a presentation a little while ago. That microphone sounded a little goofy, and it looks like it could be a benefit to property owners. And I wanted you guys to come here and share your story and a little bit of background. I think you're both real estate. I think Alyssa, you're a real estate investor, and Lisa is a real estate broker. And give us a little bit of background and tell us a little bit about your program, please.
Sure. Good evening, everyone. I am Lisa Postel. First, I want to thank Tony and the investment group for having us enlighten them about Zoom Energy. I have been a real estate agent here, a licensed real estate agent here in Illinois for the past 16 years. I'm also licensed in New York City. I primarily work in a residential space, do very small, like multi-unit buildings and some office space on the commercial end. Prior to that, I was in product management and also in insurance. I was introduced to Zoom Energy through a gentleman by the name of James Adlam. He's a senior vice president with the company and has been in the business in this space for about 20 years. He's someone I've known for the past 7 years and a man of high integrity and great business savvy. So when he shared it with me, I thought it was an unprecedented opportunity and jumped right on board. Mr. Adlam is also on this Zoom call with us this evening. And then in addition, Alyssa Adlam, who Mr. Hardy referenced, is also on this call, and she's going to add all the information that you need to know about Zoom. She is out of the Chicago marketplace and has been a real estate business investor for the past 20 years. And she has found a way to really leverage Zoom Energy in the Ohio market space. So I'm going to just turn the floor over to Miss Alyssa Miller, and she will take you through the program.
Thank you so much, Lisa. I would really like to say thank you to Tony, Arlecta, and Ebony for putting this group together. I'm an investor in the Cincinnati, Ohio area. And at the very beginning of this meeting, they talked about the importance of belonging to an investment organization. And that organization in Cincinnati has been the cornerstone to my success. So if you're on this call and you're in real estate, you really need to belong to their organization. It's going to be crucial to your success as well. So my name's Alyssa Miller. I have been in real estate for 20 years. This is what I do full time. I was in the single family space for about 15 of that years. And then I transitioned into the multifamily space, and that's where I am now. And real estate's been great for me. But when I was introduced to this energy, I saw an opportunity to leverage the real estate that I have to increase my cash flow and increase the value of my buildings. And so I'm just going to jump in right now, share with you guys what we're talking about. So the company is Zoom Energy. They are members of the Better Business Bureau and have been in business for a while, A+ rating. We are actually in 19 states and 2 provinces in Canada, and Illinois is deregulated for electric and gas. And the ways we generate money from Zoom Energy is several. The first is when you have 12 gas or electric bills, they're going to average those bills and give that to you as a direct deposit every month. The next way is we have bonuses when you acquire your customers, and then we have 3 to 20